People like Senator Obama have been too busy gaming the system and haven't ever done a thing to actually challenge the system.
Todd Jeffries and Don Pryor on News Radio 590 KLBJ. It is 10:19. And joining us on the 590 Newsline live is Congressman Ron Paul. And if I were you, I would say I told you so.
No kidding.
I mean, you started talking about this financial mess that we're in. I'm probably 5, 6, 7, 8 years ago, didn't you?
Well, yeah, I've been talking about it for a long time because I've been interested in monetary policy. So the seeds have been planted a long time ago. I actually got interested in politics through the breakdown of the monetary system in 1971 and thought it was a very bad omen for the future. And now we're starting to witness the future because it's here, and we're seeing the disintegration of a financial system that was not viable from the beginning. And they're frantically running around trying to bail everybody out. And unfortunately, there's no easy answers to the problems we face.
This morning, the Treasury Department plans to tap into that Depression-era fund that provides guarantees for the market mutual funds. And the Fed, meanwhile, says it will expand its emergency lending efforts to commercial banks to finance purchases of assets-backed paper from money market funds as well. And they say that this is going to help. This is what we need to do right now. And they're talking about the kind of money that includes 12 to 13 zeros behind it.
Right, and the markets seem to be responding reasonably well today. The stocks are up, and yet to me, I sort of look at it like a drug addict getting a fix. They do feel better, but we are addicted to inflation, which to me means continued increase in the money supply and artificially low interest rates. But you can't solve an addiction by giving more drugs to the patient. So everything they've said today or in the last several months should be a sign that the dollar is doomed to get much, much weaker, which means that we will have inflation, we will have high interest rates, and that eventually I think the monetary system will have to be revamped, not just tinkered with and patched. What they're trying to do is patch to a system that is not workable, and there's going to have to be some serious thought about how to take care of this. I just don't think on the long term this will be successful. Hopefully they can iron things out for a little while and give us time to put something together. But the panic is there. And when you see all those individuals, the important figures in Washington come together last night, that is, if people knew what was going on, that should almost panic you to think how worried they are. To me, my concerns, what I've written about and talked about for so many years, is the dollar. The dollar is the worldwide reserve currency. Everybody's in bed together. It's a global issue, and it's based on a fiat currency, so it's artificial. And when people lose trust, then it comes unglued, and that's what we're starting to witness.
We had a quote this morning earlier from Senate Banking Committee Chairman Chris Dodd. He's a Democrat. He told ABC's Good Morning America today that we were literally maybe days away from a complete meltdown of our financial system. He's on that committee, that banking committee. He's the chairman. How come he hasn't said anything or done anything about this in previous weeks?
And because I don't think he approaches it from a monetary viewpoint that I do, because he would be one that wouldn't hesitate to spend a little money here and there. And this is the reason why I don't vote to spend any money, because that's where the pressure comes from. We spend money we don't have, we overtax, we overborrow, then we still don't have enough, then we print the money, and that is where the real source of the problem comes from.
Well, that's what I was going to ask you. We talk about $600 billion, $85 billion here and there, bailing out all these different institutions. We're now talking possibly $2 trillion. Where does that money come from?
Out of thin air.
Really? I mean,
just make it.
We don't have it. Like yesterday, the day before, they announced $85 billion without an appropriation, without consultation with the Congress. $85 billion, and they buy out and bail out AIG. But the Fed did this, and the Fed has the authority, tragically, to just print the money. So
literally, just print the money.
This is the source of the moral hazard. People just always figure the government will bail them out, and they have for decades, but now it's coming to an end. It won't work.
Now, you've had a chance to look Ben Bernanke in the eye several times there in Washington and throw some questions at him. You guys don't like each other too much, do you?
Oh, I don't think it's a personal thing. I think we just totally disagree on economic policy. I don't even see it in a personal way. He may have personal feelings because I don't think he looks annoyed when I ask him these questions because I think deep down in his heart he knows I'm right.
You've thrown these questions
on the
at him.
Side of the issues.
You have thrown these questions at him for quite a while. I've seen it. I've watched it live, and he kind of looks down and smirks. This is not funny. This is serious.
Yeah.
The value of the dollar is going to just plummet, and oil is going to go through the roof.
When your money market mutual funds when a dollar is not a dollar there, that is scary.
That's right. And now the president just announced we will bail out all money market funds.
Is that unprecedented?
Oh, absolutely. I mean, what's going on here is nationalization of industries, the mortgage industry and the insurance industry. So we're having socialism rammed down our throats at the expense of the consumer and the taxpayer because the value of their dollar is going to go down. It's very deceitful. It's immoral. It's bad economic policy, and it's totally unconstitutional. The founding fathers knew all about this because they had runaway inflation with the continental dollar. They tried to prevent it, but there was just a steady erosion of this principle from 1913 on to the point where we have reached a predictable spot in our history. This was predictable, but nobody wanted to pay much attention because it was much too easy to get by spending and get reelected and not raise taxes and police the world and pass out welfare and never be responsible. But the economic law dictates that you have to live within your means eventually.
Now that we're in the business, we the taxpayer in the home mortgage business, it looks like this Paulson, Bush, Bernanke plan is going to go through sometime next week. Now we have to find buyers of homes to make it work, and you just can't create buyers out of thin air unless you grant some citizenship to a few illegals.
Yeah.
How are we going to turn this around and make it at least break even for us, the taxpayers?
Well, you have to do exactly opposite of what they're doing because they say they're illiquid. Well, of course they are because the prices are too high. But there's nothing utterly tragic about prices of houses going down. People who speculated and borrowed too much and didn't act responsibly, yes, it's a problem for them. But if the price of houses go down, people that are poor might be able to buy a house. I mean, you have to let the market set the price of the house. The government can't prop up the prices. We're in price fixing right now, and it's the issue of price fixing which dooms economic theories of the socialists because they don't allow the market to set prices, and now we won't let the market set the price of the houses. You can't prop up the prices of houses and think we're going to get out of it. You need the prices to go down, and we need to get supply and demand in balance, but this idea that we are going to create greater demand and keep prices high won't work.
All right, Congressman, thank you very much.
Thank you.
You have a great day. Congressman Ron Paul on the Todd and Don Show on News Radio 590 KLBJ.